Welcome to the Daily Business and Finance Show. Exploring the economic roller coaster, producer price index heats up, TikTok's political tango, and China's retaliation. Boeing's emergency landing and FTC's monopoly concerns. Lithium America's financial boost, U.S. solar firms' import crisis, and market turbulence with Nasdaq, S&P, Dow. Plus Altria's major share sale and raised guidance for 2024. Stay tuned after this short ad break to delve deeper into these headlines. In February, the Producer Price Index, also known as PPI, experienced a rise of 0.6%, exceeding the anticipated increase of 0.3%. The primary reason for this surge is attributed to a significant increase in final demand energy prices that saw a leap of 4.4%. Despite this unforeseen escalation, experts indicate that most inflation occurred outside core sectors such as food and energy. The probability for a rate cut in May has dropped to 8.2%, whereas the odds for maintaining rates at the Federal Reserve meeting in June have seen a slight uptick.
Steve Mnuchin, the former Treasury Secretary, intends to form a group of investors for the purpose of purchasing TikTok from ByteDance, a company based in China. This development comes on the heels of a bill passed by the U.S. House of Representatives. If enacted, this legislation could compel ByteDance to sell off TikTok's operations within the United States or risk being banned across the country. However, it is still unclear how this bill will fare in the Senate. The outcome could have significant ramifications for restrictions on social media and rights protected under the First Amendment.
The United States House of Representatives has approved a legislation that could lead to the prohibition of TikTok unless it disassociates from its Chinese parent firm, ByteDance. Despite lacking proof of TikTok posing a risk to national security, China is accusing the United States of intimidation. This action signifies a change in approach towards China and may influence American freedoms and economic strategies, with potential effects on sectors ranging from solar energy to semiconductors.
A Boeing 777, operated by American Airlines, was forced to execute an emergency landing at Los Angeles International Airport due to a potential mechanical problem. This incident comes on the heels of comparable situations involving United Airlines and another flight that remains unnamed. Concurrently, the National Transportation Safety Board is conducting an ongoing investigation into who was responsible for maintenance on a door plug implicated in Alaska Airlines' Midair emergency in January with a Boeing 737 MAX 9.
Lithium Americas, a mining company, saw a 9% increase in their share prices following an announcement that the Biden administration is planning to provide a loan of $2 billion for their lithium mine located in Nevada. This loan from the U.S. Department of Energy is anticipated to be announced shortly and will be used to finance a lithium carbonate processing plant situated next to the company's Thacker Pass mine, which is worth $2.2 billion. This marks the largest loan ever given by the department's loan programs office to any mining firm.
Mark Widmer, the chief executive officer of First Solar, has issued a warning that the American solar industry is in jeopardy due to an influx of inexpensive panels from China. Even with incentives provided by the Inflation Reduction Act, manufacturers in North America are putting a stop to their expansion plans. Companies like First Solar are advocating for more stringent enforcement of tariffs and express concern that if subsidies were to be lost, it could result in a market overrun by Chinese imports. This would mirror the current situation in Europe.
United States stocks experienced a decline while Treasury yields witnessed a significant increase due to reports of escalating inflation and slow consumer expenditure. The Standard & Poor's 500, Dow Jones Industrial Average, and Nasdaq Composite Index all recorded losses. Contrary to the anticipation of a rate reduction in June, the Federal Reserve might reassess this decision in light of these economic signals. In other news, unemployment claims were lower than projected last week. Interestingly, shares of Dollar General fell even though they surpassed quarterly predictions, whereas Dick's Sporting Goods saw an upswing following an impressive holiday quarter report.
Lina Khan, the chair of the Federal Trade Commission, has expressed criticism towards Boeing for its monopolistic status and being too big to fail following its acquisition of McDonnell Douglas in 1997. She underscored the dangers associated with such dominance, which include geopolitical vulnerabilities and taxpayer liabilities. This critique comes at a time when Boeing is under scrutiny due to multiple safety investigations and a criminal probe related to an incident involving a 737 MAX 9 aircraft.
Altria has plans to offload 35 million shares of Anheuser-Busch InBev via a worldwide secondary offering. This move will boost its current share buyback program by an additional $2.4 billion. Furthermore, the company has raised its profit forecast for the year 2024 and will continue to hold 2 positions on the ABI board until the year 2025. After this offering, Altria's remaining stake in ABI is expected to be approximately 8.1%. And that wraps up today's episode of the Daily Business and Finance Show. Remember, stay informed, stay inspired, and we'll meet again tomorrow. Farewell. I'm Montgomery Jones.
And I'm Amalia Dupre. Goodbye for now, until we meet again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. This podcast provides information only and should not be construed as financial or business advice. Check out our other podcasts in our network at classicstudios.com.